Hello and welcome to Livewire Markets. My name's Tom Richardson and today I'm sitting down with Tung Nguyen and we're going to talk about the two best performing asset classes over the past couple of years. The first one is Bitcoin. It's hit a record high as I'm talking right now, close to $111,000. It's up 10x in the last 5 years and everybody who's ever bought it has made a profit on it. The second one is gold. It's up about 42% over the past year. Tung is an investor in Bitcoin and gold and is going to talk to us about his story. Tung, welcome.
You're welcome. Yeah.
First up, can you just tell us a little bit about yourself, your journey, where you work perhaps now?
The family's originally from Vietnam. We came over to Australia after the Vietnam War. So I was raised here we arrived when we were 3-4 years old, grew up in Australia, learned to eat Vegemite and all those good things. Did university here, studied a marketing degree, worked in consulting for a time, and I stumbled across Bitcoin when I was working in a foreign exchange business. And this would have been around 2014, 2015, and I saw the potential for this to potentially really disrupt banking and also the payments market globally. That's when I started to get interested into that. And at the same time, I was just looking at all the different assets around available to us, from equities to property. And I saw this huge inflationary wave of countries around the world, Japan, the UK, Australia, America, all printing money. And I looked back in history at the times when that had occurred, and you saw these huge inflationary spikes in the price of gold and precious metals. And that's how I started to get interested in that. And what I do now, I'm a product and strategy guy, so I help large-scale organizations try and understand what are the major shifts in technology around the world and how to pivot their products to best optimize and leverage the benefits for their organization using that technology.
So I think you studied marketing at university. You're not a professional investor in that you don't run money for other people.
No.
You run it on behalf of your family. And how did you kind of teach yourself about investing?
I went on a process of just self-education. And so I read about 40 books over 18 months to really understand how does the economy work, how do assets work, how do you invest in different asset classes, what really drives prices, and the relationship between things like policy to shifts in demographics to shifts in house prices, how does that all work? And that was the journey for me following the global financial crisis. And I started to get better at it by 2014, 2015, which allowed me to see opportunities in things like Bitcoin and gold.
Any particular books you'd recommend to people?
Yeah. So from the very beginning, I would probably recommend The Millionaire Next Door. And that's simply because, we go through life and we've got we're trying to keep up with the Joneses, we're trying to keep up with the Kardashians, and everyone thinks that what a millionaire looks like is someone who's driving a Lamborghini, living in a McMansion, and going to Michelin star restaurants every night. But that's not what millionaires actually look like. And so The Millionaire Next Door really taught me, based on data from America, and there has been subsequent books with more recent data in Australia and overseas, but showed me that the average millionaire lives very, very reasonably. So The Millionaire Next Door is a book that I definitely recommend to absolutely everyone.
Sounds like both those books kind of getting at the idea that you should spend less than you earn,
yes,
save,
yes,
and invest. One group of people that aren't doing that is national governments.
All of them around the world.
Right, so they are actually spending a lot more than they earn. They're running big fiscal deficits, and a lot of people think this is what's driving the Bitcoin price higher. So, is this what is driving the Bitcoin price higher? The idea that people think the US is accumulating debt too quickly?
Yes.
Yeah.
I'll expand on that. So, there's one of my hobbies is following billionaires. And Paul Tudor Jones earlier this year went on national television and he said that, the debt is too high, it's completely unsustainable. The only way for them to get out of this is to print more money, which is a soft default on the debt. And he says, I'm long two assets. I'm long Bitcoin and I'm long gold. So that's one billionaire. And Paul Tudor Jones is an absolute legend. The second billionaire that I follow is Ray Dalio. And he's got this really good video, you can find it on YouTube, about how the economy actually works. And he says that, we go through all of these cycles. It's very, very normal. But the thing is, once you get to the point where you're ridiculously over leveraged, there's only a handful of ways to be able to fix that problem. And one of them is to grow out of it, which is what I think the latest administration in America is trying to do. They're trying to grow out of this slump. But the most common way, if you look back through history, even back to ancient Rome, the way that they do it is they inflate the money away.
I think Treasurer Scott Bessent in the US, his view is on the record that the way they can get over this debt to GDP problem, or their debt problem, is to grow GDP faster than the debt. But if they're growing the debt at, let's say 6.7%, then how can they grow GDP faster than that? Well, they're probably thinking, well, we can cut rates, cut taxes, hope that AI boosts productivity. But that all sounds like it's just going to increase liquidity. They can probably print money. And all of that is kind of a traditional driver of the Bitcoin price, of the gold price. So in your view, does that lead to higher Bitcoin prices?
It does.
And then if we think about Europe as well, they're no better. I think they have a European stability mechanism that limits fiscal deficits to 3%, but many nations are also in breach of that 3% debt to GDP. It's supposed to be 60%. So there's this picture, I guess, of countries spending more than they earn, the value of money falling, and this is probably what's driving people into both Bitcoin and gold. But if we think about what's better, if we take Paul Tudor Jones's approach, he just says, follow the price action, back the fastest horse kind of thing. If the fastest horse is Bitcoin, back Bitcoin. But he's also, I think, been on the record that he doesn't mind gold so much. So what are the advantages, do you think, between Bitcoin and gold?
Great question. Great question. So one of my favorite books as part of that process of learning was Nassim Taleb's book called Black Swan. And in there he talks about this thing called a barbell strategy. And so on one side of the barbell, you've got things that are ridiculously safe. And if you think of every single asset you own in your portfolio as like a soccer player, each soccer player has a role. You've got a goalie, you've got a striker, and they play different roles on that team. And so the left end of the barbell, its job is to protect you, to keep you safe. And that's the role that gold plays. And on the right-hand side, what you've got is risk assets that have an asymmetric risk and return. And that's where the potential upside is dramatically much higher than the potential downside. And you don't need to allocate like a significant portion of money into that side of the asset pool to actually get extraordinary results. And Bitcoin fits into that side. It just so happens to be a coincidence at the moment where we happen to be in a precious metal bull market, which favors the left side, and also in an inflationary monetary expansion market, which favors the right side. So both sides are going up at the time. But in the worst case scenario, if you invest like that and you protect your downside and you pick really good asymmetric bets, then that's a really good portfolio outcome.
And if we think about Bitcoin, Satoshi Nakamoto, take it back a bit, he actually invented it originally as money. Yes. Some people are a little bit upset that big institutions, BlackRock, Vanguard, they now want to kind of invest in Bitcoin themselves or sell it to retail clients, charge fees for these retail clients to invest in ETFs, when originally it was supposed to be this decentralized method to free yourself from government, free yourself from big finance, free yourself from Wall Street. What do you think about that? Do you think people should keep it in cold storage, use ETFs, use exchanges? What's your view on all that?
I think that dream and that vision is still real. I remember when I first started getting into this space in 2014, the people that I was speaking to that were involved in Bitcoin were the smartest people in the room. They were IT people, cryptographic people, whereas now there's a whole bunch of crypto bros out there who talk about diamond hands and moons. So chalk and cheese in terms of the IQ spectrum of the people that you talk to. I think that for people who still want to be like a sovereign citizen, they still want to have control of their assets, they want to have it outside of the bank, outside of the purview of government, that is still possible, and you could do that by holding it in cold storage yourself. But then equally, you've got people who are in their 50s, 60s. I've got a friend who's turned 70, and his biggest allocation in super fund is gold. His second biggest one is cryptocurrency. For that sort of user, they don't have like the technical nous to be able to go through down the path of cold storage. Just holding it in ETF form is perfectly fine. So I think it comes down to what is your purpose? What is your reason of holding it? Is it just to balance out your portfolio? Is it to get asymmetric risk and reward? Or is it to actually diversify yourself to the point where, if I think about my parents, Like when they left Vietnam, if they had a form of portable wealth that they could take to a new country, we wouldn't have had to come to Australia and start from the very beginning from scratch again. So for me, where Bitcoin sits in my portfolio is that sovereign wealth component, where in the event that there's a war, China or some other country starts to invade Australia and I need to get out of Dodge very, very quickly, I can shift a 7-figure position of wealth off to a new country, start again, buy a house, and it's a very clean, safe, and good start, as opposed to what my parents had to do.
So it sounds like you think of it as a store of value, I guess.
Yeah.
Originally, Satoshi Nakamoto envisioned it as money, a decentralized form of money. And if we think about what is money, it needs to be a means of exchange to buy goods and services. I think it can do that. I even had lunch in Melbourne. We paid for lunch and coffees to the restaurant owner with an amount of Bitcoin. I think
did you scan a QR code or did you pay via a card?
It was on a phone-to-phone via QR code.
Okay.
So, but the transaction never touched a bank account, right?
Yes.
That most people would associate as that's how you would pay for things, using bank accounts, bank to bank.
Yep.
So that was quite enlightening for me. So we can see it could work as a means of exchange without the need for bank accounts, but it also needs to be a store of value, money, a reserve of future purchasing power, and potentially it works as that. But it also needs to be a stable unit of account, right? And this is where it may fall down as money because the price is relentlessly rising, right? And almost everybody buys Bitcoin on the expectation that it's going to rise. And falling
and
as well.
Falling.
But I mean, so far 99.99999% of people that have bought it have made money on it. So is it a stable unit of account? Not really, because the lunch we paid $70 for a couple of sandwiches and a couple of coffees, but in reality, that's cost us $210 now. And that was only a couple of years ago, that lunch. So the restaurant owners made 3 times his money. And why would people want to spend Bitcoin today if they expect its value to increase in the future? So perhaps as money, it might not work.
It's too soon.
Unless we kind of say, okay, we're going to get rid of central banks, we're going to get rid of governments, we're going to replace fiat with Bitcoin, and we're all going to live in a meritocracy and a utopia. It might not work as money, unfortunately, but it does work as a store of value, and in a similar way to what a lot of people call digital gold. It's got a boast, though, recently from President Trump, slightly controversial. He got a lot of donations from the cryptocurrency industry that helped him, I guess, market himself. Some people say, almost helped him buy the election, and after that he's been very pro-cryptocurrency, pro-Bitcoin. Prices, I think since November 24 have gone up a lot. So Trump actually in his first term, he promised he was going to drain the swamp, but arguably he's flooded the swamp, right? What do you think about that?
Any leader of any nation, like if they want their economy to grow and thrive, they actually have to invest in policy that supports emerging technology. Because you think of the transition, getting off the farms, and into the factories, that required a huge boost in technology. If you think about the production line and getting cars on the road, that required an awful lot of technology. You think about the computer revolution, that required an incredible amount of technology. If I think about the most innovative forms of technology available at the moment, there's AI, there's cryptocurrency, there's robotics. So my suspicion is he's doing whatever he can to keep America at the forefront of that technology. And for the longest time, Gary Gensler has been really anti-Bitcoin. He prevented the Bitcoin ETF from coming out. Elizabeth Warren has been really anti it. The whole Democratic Party has been pretty much anti it. And so when a political party comes out in favor of a emerging technology, I think it's a great sign. Obviously, they have to regulate in the same way that they regulate banking and payments and credit and all those other things that wraps around it. But I think there's a role to play for cryptocurrency in modern payments. And I'm looking forward to that future happening.
Sure. And what's caught my eye about the price action recently in Bitcoin is we had a sell-off in equities. They've rebounded a little bit, but they're still a fair way off recent highs. But the Bitcoin price has powered ahead today. I think over the last couple of years, the Bitcoin price has pretty much tracked the NASDAQ 100 price. Most people have considered it a risk-on asset, a liquidity bellwether. But now, let's say in the last couple of weeks even, it seems to have been going higher, even though tech stocks are wobbling. So would you say that's potentially bullish for the Bitcoin price in that it might have separated itself or identified itself as a store of value, given we've also got rising bond yields signaling investors are worried about inflation ahead? Can it break this correlation with shares, with risk-on shares and go higher, do you think?
I think short-term it can, and that's what we're seeing at the moment. I think long-term what happens is as more and more enterprise capital and institutional capital floods into cryptocurrency and Bitcoin in particular, what happens is as the market cap expands, it needs ever more money for it to expand in terms of a percentage gain. And so my sneaking hypothesis, once we hit critical mass, and that might be $20 trillion or more, then what will happen with the Bitcoin price, it'll start to level off and it'll start to behave more like the NASDAQ, because you can't continue to grow at a 69% CAGR year on year forever. You just can't. And so my suspicion is we can break away from the NASDAQ in the short term, but eventually in the long term, it will normalize.
And if we think gold's market value is probably around about 23 trillion US, 20 trillion, Bitcoin's 2 trillion, is it? So it could, you see these people, they go on various
10x.
media shows and they claim it can go 10x if it would equal the market value of gold, and they say it's a better version of gold, and it's portable, it's digital, you don't have to carry it around. But I guess gold bugs would say, well, actually, gold's been around for 2,000 years, people can wear it. Bitcoin's been around for 16 years, you can't wear it, you can't keep it at home, you can't eat a digital hamburger, right? You'd starve. So yeah, perhaps it makes sense to own a bit of both.
The key feature, though, for me, between comparing those two things, because I love them both, the key feature is the portability. So if I go back to that nuclear portfolio, where if the proverbial hits the fan and you need to get out of the country, I can't move $1 million worth of gold out of the country. I can't. I won't be able to restart my life in another country with that amount of wealth. Whereas Bitcoin, you can. And that's the key difference for me.
Just today, we've seen this rising bond yields, and we've also seen equities still very strong. Traditionally, when bond yields rise, especially at the long end, that should pressure equities. That's because stocks are valued net present value of future cash flows. Put simply, as risk-free rates rise, the value of stocks should be lower because stocks, their future cash flows are at risk from various factors.
High cost of funding.
Essentially the business's performance. What is that telling you? Is that telling you that we're in something of a bubble, or is that telling you equities should go lower? Or is that telling you the bond markets think inflation's coming back and that's why gold and Bitcoin are higher?
If I look at the stock market right now in terms of forward PE, we're in one of the most expensive stock markets in history. Going back to .com, going back to the Great Depression, it's a very expensive stock market. And so historically, when you look at these times, if you fast forward the next 10 years, it generally doesn't perform as well. And so I think the bond yields are signaling that. But also the thing that I'm really concerned about is the yen carry trade. So interest rates on long-dated Japanese bonds have really gone up high. And what a lot of foreign institutions have done is they've borrowed cheap money in yen, they've moved that money offshore into Europe or into America. They bought American assets in US dollars, and now that cost of funding's gone up, they're going to have to unwind that trade. And so my sense is there's a whole bunch of liquidity that will flood out of these FANG stocks, the NASDAQ stocks, and it'll have to go back.
It'll have to go back to Japan. Okay. And then in terms of how you think about asset allocation, you invest in equities, I think, as well? Or?
At the moment, I don't have a huge exposure to equities. I do own some precious metal miners, gold miners, silver miners.
Your investment approach is kind of orthodox in that you say spend less than you earn and save, but it's also kind of unorthodox in that you...
Not 60-40 split.
Like cryptocurrencies and you like gold. And I think you've also got a Facebook group that talks about how you think about investing and helps people talk to each other about investing.
Yep.
Do you want to tell us about that?
Yeah. So I started a Facebook group in 2015 called Savvy Investor. And the purpose of this was to help other people become financially independent. And I set the very naive goal of helping 100 people get to their first million. And then we started a smaller group called the 1% group, and that's got about 160 millionaires in there. And so the purpose of this is to help people become financially independent and help that group find their purpose and give back to society and find passion projects to give back to the world.
And I think you just turned 50 years old?
Yes, I turned 50 this year.
Yeah, and you're planning on retiring. What's the future hold for you?
A lot of travel. So we've got 6 months of travel planned over the course of the next 12 or so months, spending lots of time with family, and then figuring what to do after a corporate life.
Great, Tung, thank you very much for coming in.
My pleasure.
If you'd like to see more of that content, please visit our website at livewiremarkets.com or subscribe to our YouTube channel.